Good morning, my name is ZHONG, and now I will present about the introduction and conclusion. Netflix is an American company that provides subscription streaming service and production. It founded on August 27 in 1997. Almost every TV now has Netflix service. The subscribers of Netflix are more than 221.8 million in worldwide. This is because Netflix can watch from many places such as smart TV and website and many on. This also made increase of his store. Netflix store has attracted many of investors, so that's why we chose Netflix as our dataset. However, predict stock is always a difficult thing without any research and mental help. The field of stock price prediction research attracts a lot of attention from investors. This is because research into the future direction of the stock market will be conducted to successful investing. So in this report, we will show some useful methods such as forecasting, trend line, hypothesis, and descriptive statistics to Netflix stock prediction. The objective of this is to predict the volume for future 5 days, determine the best fitting to model the data debt and adjust cost, and determine mean of high is greater than low.
ARULLANANTHEN. My part of this assignment is descriptive statistic. The data set we choose is Netflix stock price prediction with 1009 data. They have 7 attributes, which is date, open, high, low, close, edges close, and volume. The data in this data set means the price of day start from 5th May 2018 until 4th February 2022. Some of the date is missing because the market stock only open on Monday until Friday. Weekend and holiday of America will not open market stock. Open is mean price of stock before market stock open, while close is the price after the market stock end. Like now, the market stock is start on 10:30 p.m. until 5 a.m. in Malaysia. High and low represent the highest and lowest prices of the day. Edges close is mean close price that has been adjusted for splits, dividends, and capital gain distribution. And the last part is volume. Volume is very important in market stock because volume is to show how many buyers and sellers they are currently in stock. These are the data set and the result that have been done by me. The dates, the edges close, the volume, and here is the mean, standard error, median, mode, standard deviation, sample variance, curtosis, shortness, range, minimum, maximum, sound, count, largest and the smallest. These are the steps how to do calculate the mean, median, variance, and standard deviation. Thank you.
Hi, my name is Ong Bing Yu. Now I will talk about the trend line. The first objective is determine the best fitting to model the data set and adjust clause. In this table, it shows the each R square of trend lines. In the conclusion, the polynomial auto tree is the best fitting model because it has the higher R square value, that is R square equal to 0.7884. The second objective is find out if there are any relationship between the data adjust clause and volume. This table is created from Excel data analysis tool with regression. The table results show the significant F is less than 0.05. So we reject null hypothesis. The results show that it is statistically significant. The p-value of intercept y volume is less than 0.05, so we will reject null hypothesis. The p-value of adjust clause also is less than 0.05, so we will reject the null hypothesis. Coefficients of intercept y volume is 1631225.25.0397 and adjust clause is negative 20x629043552612. So we can get the equation y is equal to negative 20x62.9043552612x plus 1631225.250397. This is residual plot diagram show the R square equal to 4e minus 31 in linear. The R square close to 0, so the linear model is not suitable. Overall, from the residual result of regression analysis, there are 2 residuals are very high, so they call outlier. Thank you.
Hi, my name is ZHONG. So today I will present about the hypothesis testing. For the first hypothesis, we need to prove if the difference between the today's high and today's lows is lower than or equal to $15. So we are assuming the null hypothesis is the difference between the opening price and the closing price is less than or equal to $15. And the alternate hypothesis will be the opposite. And we take the alpha value as 0.05. And then we use the Excel t-test pair 2 sample for mean to compute the hypothesis testing. And we got a t statistic as negative value. So we need to minus it from 1 for the 1 from the 1 till p value because it is a upper Q test. So for that, we need to minus it from 1. So we got the p-value is approximately equal to 1. So as the p-value is greater than 0.05, we are failed to reject the null hypothesis. So in conclusion, we can conclude that the difference between the average today high and today's low of Netflix is less than or equal to $15 at 0.05 significant level. So for the second hypothesis testing, we need to determine if the average opening price of Netflix is significantly the same as the closing price. So we're assuming the null hypothesis is the difference between the opening price and closing price is equal to 0. Then the alternate hypothesis will be the not equal to 0. And we take the alpha value as 0.05 and we use the same test, t-test pair 2 sample for mean to compute the hypothesis testing. Then we got the two-tail p-value as 0.8289. So because the p-value is greater than 0.05 significant level, we fail to reject the null hypothesis. So we conclude that there is no significant difference between the average opening and closing price of Netflix. That's all for me. Thank you.
My name is Desmond, so I will take part in explaining the forecasting in our team. So for our first objective, we need to prepare the time series stationary for open and close stock for Netflix. So both open and close stock considered is the cyclical effect. In our dataset, the line chart have a maximum in $700 stock and a minimum about 220 stock in the year between 2018 to 2022. So in the year 2020, the Netflix price grew rapidly as people were stuck at home in quarantine due to the COVID-19 pandemic. Therefore, the price spiked in the particular period. So for the next is the volume. Based on the line chart, the maximum due are in year 2022 when the stock volume is abnormally high. It indicates something important is happening at the firm that investors should be aware of. It might signify recent good or terrible news of the Netflix company. For our second adjective, as aforementioned in our adjective, we tend to predict the Netflix volume for the next 5 trading days, which is from 7 February 2022 to 11 February 2022. So we're using the method regression-based forecasting in data analysis tool by taking the level of significance 95% with the coefficient value and sum the value into an equation called y. So here is the coefficient value we found using the regression method as the data analysis tool. So this is the y. So the bracket here is for our substitute use. So we assume that the value of open, high, low, close was same as the last trading days in the dataset. The values remain same as the date goes front and volume is decreasing. Henceforth, this is the result we obtain using the regression-based forecasting. That's all from me. Thank you.
In conclusion, after we finish on the experiment, we have get some results such as the trendline result show the cross product of the polynomial order tree will get the more sustainable R-square value, which is the 0.7884. The regression analysis result show that the multiple R is 0.4134 from 1009 data. It is the straight linear relationship. So using the business statistics technique can improve more accuracy data and visualize with efficient. A user may use statistical result in business to check heuristic perform, anticipate future business activities, and successfully lead enterprise. So that's all our presentation. Thank you.